Thinking about selling your business? One of the key financial metrics you'll need to understand is seller discretionary earnings, or SDE. But what exactly is it, and why is it so important for buyers and sellers? SDE is a crucial number that helps both buyers and sellers evaluate the true profitability of a business. It's essentially the total financial benefit a single owner operator would receive from the business, including the salary and benefits they take out. SDE is the starting point for determining the business's value. It's calculated by adding back certain expenses that are specific to the owner and not necessary for the ongoing operation of the business. This includes things like non recurring expenses, such as equipment purchases, remodeling costs, or attorney fees. If they're not going to happen again next year, then they may qualify for an add back. It includes non operating expenses that are unrelated to operating the business itself, such as depreciation or amortization of existing assets. If you're paying interest on a loan, but the new buyer will pay all cash, then adding back that interest expense may be appropriate to give the buyer a better sense of what they would earn. It also includes imminent changes to the business. Perhaps you're about to end a lease on an unnecessary property or lay off an existing employee whose duties will be managed by an existing employee. Then those expenses could potentially be added back. And lastly, we add back any salary or additional compensation you give yourself that is above market rate. If your position in the company is completely unnecessary to your turnkey business's operations, then you may be able to add back the entirety of your compensation. The same goes for family members or friends who are getting paid but not actually working at the business. For a buyer, SDE represents the cash flow they can expect to receive from the business, helping them assess whether it's a good investment. It gives them a clearer picture of how much money they'll actually take home, not just the business's bottom line profit. For sellers, knowing your SDE is essential when it comes time to set a fair asking price. The higher the SDE, the higher the potential sale price. But keep in mind, accurate and transparent accounting is key. Buyers will want to see clear documentation on how you arrived at that number. Here's an example. If your business has a net profit of $100,000, but you also take a $50,000 salary and $10,000 in personal expenses, your SDE would be $160,000. Buyers would then be able to use that figure as a basis for negotiations, knowing that's the real income they can expect to generate from the business. So whether you're buying or selling a business, understanding sellers' discretionary earnings is essential. For sellers, it's the key to showcasing your business's value. And for buyers, it's the clarity they need to make an informed decision. My name is Antho Zueck, Mr. Hyperlocal, business broker with Bullock Russell Real Estate Services. If you learned something, please give the video a like, and thank you for watching.